Good afternoon or evening, ladies and gentlemen, whenever you're watching this. Today is the 5th of May, and today, once again, I have taken an early exit from the trade. Basically, what happened is there was going to be an RBI event, which, in my opinion, was going to be a non event, just giving some kind of confidence to the market and the economy from Shakti Das. And while entering the position, there was quite a bit of an IV expansion on both the put and call side because of the anticipation of the kind of move that may come in during the RBI speech. I tried to have a very low risk position by having a 500 point spread, which was worth a good amount of points at that point of time. And after the speech, which turned out once again to be a non event, we saw a big fall off in the IV, and that benefited the position. Now, the reason I exited is because from the spread that I was currently in, I would not have much of a reward for holding it over a longer period of time. And in order to do that, I would have had to increase my risk by coming in by 50 points on either side, basically making a 400 point strangle. But I didn't, because essentially when the IV crush happened, there was a massive fall off in premiums. And now, after benefiting on a lower risk reward spread, then taking on a higher risk reward spread would not work out too well in case there is some kind of unanticipated move. The market right now seems to be stable above 14,500, and a good amount of call writing happening at 14,700 and above. So 14,500 to 700 seems like a likely expiry range. But at the same time, we've seen what kinds of short covering is getting triggered, what kind of long unwinding is getting triggered. We're seeing big moves in the market with options prices not factoring that into the volatility. So that being the case, being up 1%, I decided to just exit because there's not much of a trade to be had, and I don't want to take on additional risk at this point of time. Also, just to add, we have started a new post-market analysis segment, and I think from what I know, this is one of the most comprehensive data-based post-market analysis that is done, and it's going to be a daily affair. It's going to be every day towards the end of the day around 9 o'clock. So please do check it out. Ravi puts in a lot of effort to culminate all this data, and I don't think anywhere it's available in one place, and does a very good job of giving you whatever is needed to understand what happened today and potentially how is the market positioned for the next day. So please do check that segment out. So that being the case, I hope you had a good trading day. The market is still very much open. The time is 11:30. So I will catch you tomorrow for the expiry, where once again it's going to be a very risk off kind of a trade, and it's going to have very strict exit clauses, because lately markets have been very range bound from close to close, but we're seeing massive intraday moves, and it's not long before we see one of those massive intraday moves turn out to be a trending 300 400 point move in either direction. So that being the case, thank you so much for watching. I've also posted some updates on the positional trades that I have taken. I booked one position today as well, so that's covered in the video. Thank you so much for watching. Have a great day.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. Looks like we're having a gap up situation. So in fact, last night SGX was looking quite bad once the US market started to make a down move, and but however, there has been some kind of recovery during this morning, and so far looks like we're opening exactly at 14,600, somewhere around here. The idea is we're going to work with just the past 3-4 days of highs and lows. Recent high of 14,850 and recent low of around 14,400. So if you open at 14,600, the idea is there's going to be some kind of news from the RBI governor, which means premiums should hopefully be pretty good. The idea will be to sell the 14,850 250 point away call option, and the 14,350 250 point away put option at the open. So that's the plan for now, and volatility has been quite high. So once again, we'll be having something like we'll try to lock in profits as quickly as possible, depending on what happens during the day. Apart from that, yesterday entered some positional trades. Adani Ports results were to come out, so I had taken a short straddle at the money on Adani Ports. And also Reliance, I've done a particular trade which is slightly different from a regular strangle. I have sold the June 1800 put as a cash secured put, and I've sold the May 2100 call. So these are two different expiries, but this is a strangle position that will benefit from an up move in Reliance. And at the same time, since they're different expirations, at some point I'll have to square up this call and move it to the June month. So yeah, looks like pretty much yesterday's dip was a little bit of an overreaction, and we're having a gap up above 14,500 again, and very high certainty that 14,500 will be protected towards tomorrow's expiry. Okay, I've just entered the position for the day, and entered by shorting initially the 14,350 put, but started expanding rapidly, so moved down to the 14,300 and have moved my call from 14,800 to 14,750. Now, right now there's some kind of big IV expansion happening. Bank Nifty is holding on to exactly 32,500. There's going to be some big news coming out regarding the RBI policy from Governor Shaktikanta Das. Currently, we're down quite a bit, but that's mostly because from a points perspective, we're now trading close to 60,000 quantity. So we're down like 5 points, but this is purely from an expansion of IV on both sides. Calls are also gaining, puts are also gaining. And yeah, this will happen on a day when there is an event. So it is a high risk reward sort of a day. In the worst case, we're not going to take a stop loss more than 2% on the capital. So that is the idea. We are seeing IV expansion, but there's not a lot that can be done about it. So that being the case, we'll keep you posted. For now, we are quite centered on the spot. Our calls are 200 points away, and our puts are close to 250 points away, 265 right now. So okay, I don't generally listen to the news, but listening to the news now because the RBI governor is going to be live anytime soon. What I've done is I've risked off on the call side because most likely the news is going to be pertaining to how COVID situation is getting worse and what will be done. So it should be something on positive lines, and that's why I've risked off on the calls. In the morning, slight IV expansion will cause damage. You can't do anything, but it's not a loss due to some kind of a move or anything happening. It's just an IV expansion that is eventually going to crash once more or less what should be a non-event is done. In my opinion, I would think it's just going to be something on the lines of we are here to be supportive in these downtimes, yada yada. But that can lead to some kind of short covering on Bank Nifty. So that being the case, it's still a pretty good range, 250 points on the upside and 250 points on the downside. Okay, slightly off, but fair enough. For now, this is the position that I'm going to continue to hold. Kind of a break on Bank Nifty. We'll have to see what happens. Considering these options are expiring tomorrow, the speech should be starting anytime now. Okay, RBI governor's speech just got done. It was more or less a non-event, so not something to be particularly concerned about. It's led to a massive crash in the IV, and what I've done is while the IV was crashing, I exited the 14,900 put at something like 3.8 to 4 in that range and purchased the 13,800 put as a hedge. The strangle itself has lost quite a bit of value, and from here we'll be trailing a stop loss of 5 points. I'm not planning on taking 2 10-point losses back to back. So it'll be a tight stop loss, but if we start heading to 14,500, then that'll more or less be the stop loss getting hit. I might try to move down the calls to 14,750 as we try and move to 14,500. That's the exit clause on the downside, but I'm really expecting 14,500 to be protected. So it's an unlikely scenario. If you start making an up move, break the day's high, start heading over 14,600, and probably take in more put side credit. And yeah, that's the plan for now. Keep you posted. Time's 10:30. Okay, so some breathing space now, and I have booked Adani Port's short straddle that I took before the results. It's given some amount of profit, so fair enough from the IV cooling off. Yesterday, I had also entered this Reliance position, which was cash secured put for June, covered by a May 2100 call for almost no value, but I cover these with actual shares, so it's fine. Now we're seeing some kind of an up move, but I don't see too much of an up move happening. So there's a lot of call built up at 33,000, and of the opinion that there's no good news that's good enough to trigger that kind of short covering. So regardless, not overly concerned with it. This triangle has decayed by quite a bit. It's now trading at 35, 36 in that range. And the idea will be to just hold it for the rest of the day because these options are going to expire tomorrow. And slight expansions here and there, not too concerned about. But if we start start making a down move and a considerable down move, then I will be just exiting the position, currently trailing this with a stop loss of 4 to 5 points. We'll keep you posted. The time is 10:51. We've got the whole day to go. And this is a 500 points triangle, so really not too much of a headache. Okay, time to start cutting the position. I'll explain why once I'm out. I'll explain why just in a second. Okay, the reason I've exited the entire position is a little complex. Okay, so as I was exiting, I managed to lose one entire point, 50,000 of profit just in the process of exiting. But not much can be done there. But okay, let me go over why. During the IV crash, right? So this spread was trading at something like 62, 63, 64 at different points. And this spread, so I'm talking about the 14,350 and 14,750. This spread has lost quite a lot of value, and so has this spread, the spread that I was in, the 14,800 and 14,300. It has lost quite a bit of value. So it was at 46, 47, and now it has come down all the way till what is it now? 33, 34. Now, if I now, because there's not much credit in this spread, and obviously if this starts to expand to 25, how much lower will this go? This will go to like 8, 9, but then it has to eventually can't go less than 0, right? So it's not going to help me balance in this 500 point spread. This has already lost a lot of value. You have to understand that I entered at bad pricing. Fair enough. I entered at something pricing 40 essentially, and then it expanded from there by 5-6 points. So that put me in the negative. And now from there, it has crashed a lot in IV. And this entire IV crush has taken place. Now I'm in a position where my potential gain is not a lot. So if a 500 point spread is trading at 30, maybe it closes the end of the day at something like 27, 28. Yes, maybe that happens. But at the same time, what is that to gain? It's like 4 or 5 points. Now let us imagine the kind of volatility we've been seeing, which is not being priced in by options. We have some kind of big moves. Like we've got the rest of the day to go. We've got 4.5 hours of trading time left. I'm not going to be able to sit in the position, and invariably I'll have to take a bad trade to adjust. So that being the case, with the kind of IV crash that I've seen on a Wednesday, it's a pretty okay thing to exit. Now the other option would have been you could have moved closer. I could have moved closer to the 14,350 and 14,750. So that spread is still attractive. It's worth 400 point spread is worth 47. That is still an attractive spread. But here's the issue. Majority of what I had to gain, I gained with a lesser risk reward spread. Now, if I move in with a higher risk reward spread, and once again, trust me, these are not great prices for options or anything. Now, if I move in and there is like a quick move in gamma expansion, I'm going to get burnt. So it's like when I was winning, I won on a lesser risk spread, and now I've taken on more risk and I'm going to lose on a higher risk spread, which is not something I'm fancying at the moment, to put it quite simply. So that being the case, more or less calling it a day. If you see that in the past 3 days, I've been cutting out of positions very quickly and not really extracting every single point, it's because right now the premiums are just not that attractive, and there's no point in trying to stretch the trade more than what. So for the intraday trade, we're up 2.82 after closing everything, which is good enough. Of course, this is just me exiting a position, so it is showing some 4,000 loss, so you can say 2.85, but we booked a profit here between the two of about 7,500. So yeah, I'm going to scout more or less rest of the day, see if there are any trades available. In case there are, I might consider taking them up. Otherwise, that should be the end of the day. Thank you so much for watching. I will catch you tomorrow for the expiry. And once again, for this week and next week, you're going to see that my risk reward is going to be very low. Overall, I'm going to keep a very low risk reward sort of situation. On the margin used today, which was something like 2.9, it's still a good 1% return. So Thank you so much for watching. I hope you had a good trading day, and I'll catch you tomorrow.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.